Hey guys, it's Sasha. Since the Labour government came to power in July 2024, 128,000 people in the UK have lost their jobs. This is the first sustained loss of jobs since the financial crash back in 2008. And when you dig deeper into the numbers on what's happening in the UK economy, it actually looks even worse. We're actually losing jobs at a faster rate than we did at the start of the financial crash, because if you look at just the private sector alone, the number of job losses has now gone over 200,000. And guess what? We are now in November, and at the end of this month, Rachel Reeves will be announcing the new budget. We've just lost 200,000 jobs after the tax increases on businesses from the last year. This year, they apparently have to do at least double the amount of tax increases compared to what they did last year. And the problem with tax increases is that the relationship between the tax increase and the impact on the economy is not linear. If you are already on the wrong side of the Laffer curve, it can go downhill very, very quickly. The problem can get worse more quickly than many people expect. When you double the size of tax increases, the negative effect on the economy, on people's jobs, on people's ability to pay their bills, on everything can be a lot more than 2 times as bad. And I want to share some of this data that I've been looking at with you so that you can decide for yourself what you think this data is saying, whether you agree with me or not. So here is the data as it comes from the Office for National Statistics. And I made a little chart to show you how the number of jobs has changed month on month recently. And you can see that it's just not looking good, especially since summer last year, because most months we are currently losing jobs. Every single month, another red bar after a red bar the previous month. But then, if you look more closely, you might remember that 2 months ago, I was looking at the same data, and in that version of the data, this same graph looked much worse. The negative bars were much worse. So what happened? Well, after the government publishes this data every month, they then go and do adjustments if they get more accurate data. Maybe a company forgot to submit some RTI filings to HMRC. Maybe some of the filings that companies did submit automatically were incorrect there, to fix a few of them. Stuff like that, because this data, this is payroll employees, this should all be coming off automated submissions from companies' accounting stuff going to HMRC. But anyway, every month they go and adjust the old data, and those adjustments never stop. They keep revising them. In this latest report, they are still making adjustments to data from 2014. I don't know what new data they are receiving for 2014. There's generally no world in which any company is submitting any payroll information for 2014 today. There's no reason for them to actually be adjusting that data. It sounds like somebody who doesn't know what they're doing has coded it up, but that is what happens. And I was a bit surprised when I looked at the data this month. The report just magically looks so much better than it did 2 months ago. And I looked deeper and I discovered that in the last 2 months, the numbers for all of the months since the Labour government came into power were revised upwards by a total of 158,000 jobs, which sounds like it's a pretty huge adjustment to make, especially as some of these months are many months old. Like, a lot of months have happened from when that data first came out, when they decided to revise it. If they didn't make that huge adjustment, then the official numbers that we'd be looking at today would look incredibly bleak. We would be probably at a position where the government would maybe having a vote of no confidence. I don't know. The adjustment to the numbers in the last year, the adjustment that just happened in the last 2 months to the numbers from the last year has been bigger than the actual numbers that are being adjusted. Think about that. It's a bit like saying, sir, we have just measured your height, and you are exactly 6 feet tall, give or take 10 feet. And this is just the beginning. When you dig deeper, the numbers just get worse, and this is really frustrating. You know what else is really frustrating? When scammers keep calling you on the phone. I used to get a load of these phone calls.
Good evening, sir. I'm calling from your credit card company.
It rings from a landline number. You don't know if it's important. Maybe it is. Maybe it's your bank. Maybe it's your kid's school or something else, so you pick it up. And then you hear one of those scammers pretending to be HMRC saying that you owe them tax. It is really frustrating. And do you know where those scammers got my phone number? How they got my email address? They probably bought it from one of the hundreds of data brokers out there who collect information about you in legally questionable ways. These brokers know way too much about you. They know your name, your contact details. Sometimes they have your address, your date of birth, details about your family, and a lot of other stuff you probably would prefer them not to know. And they keep selling your data to whoever will pay them money. And this is where the sponsor of today's video comes in, Incogni. Incogni will go out there and delete you from all of these lists because you have a legal right to privacy. Incogni will keep going after these hundreds of different data brokers until they delete you from their database. So that next time that spammers go to them to buy a load of phone numbers to spam, your number won't be on that list. I've been with Incogni for a few months now, and it's been great. Look, 20 data brokers have now put me on their suppression list, which means they will never add me to their spam lists again. You can start using Incogni today and protect your data by clicking the link in the description or in the pinned comment. Make sure you use the code SashaUK, one word, to get an exclusive 60% off the annual Incogni plan, which is the one that I've got. With the annual plan, Incogni will keep looking out for your data appearing with any data broker and get rid of it as soon as it does. So go and get your Incogni deal and enjoy being less frustrated by spam. So over the last year, we've had really bad data on jobs when it first was reported, but somehow after that took a negative hit on the government, after confidence in the government decreased, all of that data improved massively just in the last 2 months. Not like 2 months after it came out, no, just in the last 2 months for the entire year before that. This is statistically very hard to swallow because generally speaking, your error bias should have a normal distribution around 0. So that means sometimes you should be wrong in one direction, sometimes you under forecast the number, right? Sometimes you overdo it. Sometimes you're one way or the other, but you shouldn't always, when you're making these kind of data publications, you shouldn't always be permanently wrong in the same direction, which is what's happening right now. The statistics that we're watching are only ever wrong in the direction which helps the government make the numbers look better. I guess this is obvious to people who actually have, studied Massey University as opposed to the fake statisticians or whoever it is who work at the ONS. If one of you watching this video works at the ONS, are you not genuinely really embarrassed about being so incredibly shit at your job? Do you not sometimes just look in the mirror and think you should maybe actually try doing the right thing, publishing actually accurate data, publishing data that your models actually think is the output, as opposed to just doing whatever it is that you're doing? No? I didn't think so. It just gets worse though, because you begin looking through the data in more detail and for example, let's quickly look at all of this data sector by sector. You might spot a trend. Agriculture jobs are flat. There is no movement. Mining jobs are down. Unsurprising. Manufacturing is down. Then we have energy and water. These two industries, where prices have gone absolutely through the roof in the last 3 years, are apparently hiring a few more people. The prices have gone up largely because the previous government, the current UK governments are all both mutually equally incompetent at managing these markets. The average water bill is up 26% this year. Electricity is 125% more expensive than it was 4 years ago. I know, easy to forget. 4 years ago in 2021. So those sectors are now employing a few more people because they are making so much more money in revenue. And here is the difference between these sectors and the other ones. If somebody manufactures something, we just saw manufacturing jobs are down. If somebody manufactures something, maybe a table or a car or something like that, you don't have to buy it. It's up to you. There's a choice. There's a free market. Maybe you can buy a different table. Maybe you don't need to buy a table whatsoever. If you want to buy that table because you like it, because you need to replace your old broken one, because you think it's good value, that is completely 100% your choice. The manufacturing industry growing is a net positive to the consumer. Jobs growing in the manufacturing industry is a net positive for the consumer. But you don't get to choose whether you want to pay your water supplier or not. You don't choose that I don't want to pay the guys from wherever it is that I live, Southeastern Water. I want to pay the guys in Scotland instead. No, your choice is one company out of one. There is no choice at all. And you have to pay whatever that company decides to charge you. There's no option not to. And we have a situation where the UK government has basically enabled an open racket where water companies, complete monopolies, can increase their bills by as much as 50% in 1 year. Because apparently the reason for this, right, is because those water companies don't have enough cash to fix the leaks and maintain the system. And yet there was no cash shortage. There was no problem with paying out cash as big dividends to the shareholders over many, many years. Interesting that, right? So going back to the jobs data, as far as the consumer is concerned, as far as you or I are concerned, water and energy are not net positive contributors to your life. People don't generally go and say, this month I'm feeling great. I'm going to pay a bit more money to the energy company. It's a thing that you have to pay just to keep your lights on, literally. Then we have construction. Construction jobs are down. Retail jobs are down. Transportation and storage jobs are up. I do wonder what proportion of this is transportation rather than storage, because we'll get the same problem as with energy and water. Your train ticket to work just became another 5 or 6% more expensive because every year it becomes 6% more expensive, even though your wages are not going up at that rate. They haven't gone up this year, but you have to pay 5 or 6% more to get there on the train. Well, too bad for you. You just have to suck it up. Sucks for you. So again, another industry that is a net financial drag on the consumer is seeing jobs go up. But then we have another optional industry, accommodation and food. Jobs are down a lot. You don't have to go and stay in a hotel. You don't have to go to the theme park. You don't have to go to your local pub or restaurant. But those jobs are down because that's where consumers have a choice of whether or not to pay money for it. IT jobs are down. Finance and insurance, that's another leech industry. Unless you're the sort of person who really enjoys taking out a loan so that you can pay for your water and electricity bills. Unless you're that kind of person, most people don't enjoy paying money to the bank for the privilege of borrowing money from them. Jobs in that industry are up. That's a bit of an interesting stat. I can keep on going, but the most fascinating thing in this section is the bit at the end, because this bit is all about government jobs. It's public administration and defense, it's education, and it's health and social work. These three columns out of this entire table are over 30% of all of these jobs in the UK. And guess what? These jobs, this bit is actively growing at the moment. It's growing a lot. The government is hiring a lot of people because that dilutes the overall job numbers. Jobs in the private sector are evaporating, but if you hire a lot of people into government jobs, into the public sector at the same time as everybody else is losing their jobs, well, it makes the overall numbers look better, right? In fact, if you exclude this chunk of job growth here, if you only count the private sector jobs, so just everything minus these columns, then we've lost 204,000 private sector jobs since this government have come into power. And that is a startling statistic. The issue that is really critical to understand is that the public sector jobs are financed by the private sector existing. This system does not work if the private sector collapses. Now, sure, people in public sector jobs also pay taxes. This is not me trying to cast shade at people working in the public sector. In fact, my opinion on people working in the public sector is the exact opposite. I have infinite amounts of admiration for anyone who works as a teacher, works in a hospital, but I know I would not be able to do those jobs for more than a day. I would not last. But the simple fact is, for someone in the public sector to be able to be paid for that job, that money has to come from taxation. The government has to take that revenue from somewhere else in order to pay it out for all of these new jobs. People in the public sector also do pay taxes, but the taxes that they pay are less than 100% of the salary. So the money for the rest has to come from the outside, from somewhere else. And what we are seeing happen is the money that's coming from the outside is drying up. And so what happens? Well, the government is borrowing more and more money because there is this gap to pay for hiring more and more people into the public sector while the private sector is shrinking. We've just heard that the UK government set yet another borrowing record with the highest borrowing in September in 5 years. 5 years ago, remember, was when everyone was panicking about COVID, when the government was just giving out infinite amounts of money. We haven't broken that one, but it could get worse. In just 1 month, in September, the UK government borrowed £20.2 billion. This is a very large amount of money. This is more than the UK government takes in capital gains tax in a whole year. We've had months of debate over what should happen with capital gains tax. Should it go up? How can the rich be taxed even more than they already are? Because, every problem is the problem of the rich not paying enough tax. But for whatever reason, there is no debate at all about the rate at which the government is spending money, which is a much bigger problem. It is an order of magnitude bigger problem. If you go out and spend every single pound that you make, and then you go and borrow a ton of money on top of that, and you spend all of that too, and then you have nothing left, then maybe you should just consider, maybe you should look at where you're spending the money and just make sure that it makes sense. Make sure that none of it is being wasted. I think I will leave that conversation for another video, because that's a can of worms that needs a bit more time in a dedicated video. But the situation that we're in right now is just absolutely dire. Apparently, Rachel Reeves is now considering an exit tax. This is a tax that you pay if you choose to leave the UK. If you're a business owner and you depart, they want to take a chunk of money from you, because we've just had the founder of Revolut leave the UK, and he moved to Dubai with his 11 billion or whatever it was fortune. And the UK government looked at this and said, we should probably just create a tax to stop people from leaving. Imagine if you are a restaurant, right? I like simple analogies. You want to make more money. How do you make more money? Well, the correct answer is that you need to figure out how to make more people come to your restaurant so that those people buy more food and drink from you. And then if the demand for people coming is so high that you can't possibly serve all of them, then you can think about increasing the prices, right? But this new strategy from the Labour government is the opposite. Instead of trying to get more people to come, what you do is you add a tax so that the people who are already in the restaurant cannot leave. And so the hope is that the people sitting in the restaurant will be forced to order more food and drink because they have no choice. And if they do leave, then they have to pay you a load of money, so you will make more money that way. Now, the obvious glaring problem with this strategy is that it means no new people will come to the restaurant, because before they enter the restaurant, they will look at the menu and they will see that there is a fucking huge exit tax, and that means that once they come in, they cannot leave. So you will never have new customers arrive, right? It's exceptionally obvious when you put it this way, but it's exactly the same as the problem with this exit tax. The UK economy is already suffering because there is no growth. In order to get growth, the UK needs to attract investment. It needs to attract international companies. It needs to attract entrepreneurs to decide to set up their business in the UK instead of somewhere else in Europe, or maybe in the United States or in Dubai or wherever. It needs highly skilled workers who can choose to live anywhere, but you want them to choose to live in London instead of San Francisco or New York or Berlin. And if they go ahead with this new wealth tax idea, if the UK government goes ahead with it, the net result will be the exact opposite of what they think it will be. It is not if or maybe, it will be the exact opposite. The already shrinking private sector is going to shrink even more. And the black hole, this black hole that we keep talking about in the UK government's finances, is just going to get bigger until it becomes almost impossible to figure out what to do. It is so incredibly frustrating to live in a country which seems to be governed by idiots, by people who are so exceptionally awful at basic logic, who don't care about the fact that nothing that they're talking about is working, just stick fingers in the ears and go, la la, it's all fine. It was completely obvious a year ago that the ideas that this government was leaking ahead of the budget would lead to job losses. It was so obvious that random guys on YouTube would make videos at the time, I've got the receipts, warning this would be exactly what will happen. And then it happened. And absolutely nobody could have predicted, who could have thought this would happen, right? Well, now it's that time all over again. It's Groundhog Day. And guess what? If they go after business creators, again, if they introduce a punitive exit tax or punish businesses for hiring people or punish businesses for, daring to choose the UK as the place where they want to do their business, those businesses are going to stop coming. Those businesses will stop hiring. The businesses will stop expanding. Some of those businesses will move abroad. Some of them will choose to move some of their operations abroad. And in the last year, we haven't really seen any big headlines about mass redundancies like we did at some points in the past, because that is not what's happening right now. We're not actually seeing large corporates do massive layoffs. That's not what is happening. It's not like banks firing people back in 2009. The banks are actually incidentally doing just fine. They're being paid a whole load of interest on the money that they are holding with the Bank of England by the Bank of England for no reason other than the fact that the Bank of England base rate is high. And the interest that retail customers pay to the banks is also higher, also because of the high interest rates. What we are seeing at the moment is not what we saw back in 2008. It is a death by 1,000 cuts. It's the small business owners choosing to move to Spain, choosing to move to Portugal, choosing to move to Dubai, or anywhere else pretty much, because the UK has announced loud and clear that they do not like you. They do not want you in the UK if you want to set up a business. They do not want you to take a risk if you choose to take a risk. They want to punish you by charging you very high levels of tax, increasing levels of tax. We will see what happens at the end of the month, and if you haven't subscribed already and you want some serious commentary on what the government announces, make sure you subscribe. But I am guessing that the only thing that Rachel Reeves and the rest of the incompetent clowns in government can come up with is just more taxes. Once again, we will have a budget which will have no attempt to kickstart growth, like no policies whatsoever, which is what happened last time. And we will be sitting here through the next few months wondering, why is it that people just keep losing their jobs? How come private companies are struggling? Remember, go and check out Incogni, who sponsored this video. Use my code SashaUK to get your 60% discount off the annual plan. Click the link in the description below. Thank you so much for watching, and I'll see you later.